Oh my goodness. Two two Twitter spaces in the same weekend? The end is near. That's the only explanation. The end must be near. Well, good morning. Good morning, everyone. So you're probably asking yourself, how on earth did he find a way back on the airways? Well, my wife decided to go with her family members to the outlets for shopping. So that's uh that's what's given me the opportunity. I said, well, you're getting to do what you want to do. Can I get on there and ramble on ICT? So ramblers, let's get rambling. So we're looking at a topic that many times I've been asked either in my private mentorship or people in Twitter or people in the comment section of my videos. When I open up the comment section, they'll ask me, what's my routine? And I've shared my routine on Twitter. I said pretty much what I do, what I eat, how I eat, my meal plans, and what I do throughout the day. That has been thrown into disarray with this whole house move here. There's been things that have challenged that schedule, so I've had to augment and change things. But the painters are done, and we are waiting on the final pieces of furniture, which will be months away from now. But for the time being, we have pretty much everything that's going to be here, at least through the holidays. So it's allowing a little bit of normalcy. I have to put everything together in my trading room, which is all sitting in the middle of the room under a sheet. So once that gets put together this week, I'll give you a tour. So the routine in the morning, I think really what everyone's asking, because they really don't care about, the calories and the meals I eat and how I exercise and what stretching routines I do and all those types of things. That's the boring thing. Nobody's interested in that. But I did share it on Twitter. But I think what they're asking for is what's my trading morning routine? Like, what do I do in the morning? Like before I sit down in the charts, like what is going through my mind? What do I consider? What are things that are important to me as an analyst? What do I look for as a supportive structure, a resource? What resources do I use? Those types of things. And I kind of want to talk a little bit about that today. And I know I like to be facetious and say, I'm going to have a short one here. I don't know how long this one's going to go, so it might be brief, but I'll open up at the end. I'll take 5 questions because I know a lot of you want to have a question answered. I'd like to know what your routine is. So if you send that in a tweet reply to this, try to be brief or whatever. It'd be cool for the community, and plus, I'm being inquisitive about it as well. But when I wake up, if I'm napping in the afternoon, because I do generally try to take a nap in the afternoon before the PM session in S&P, I will again hydrate. But if I'm waking up for the morning session, the first thing I do is hydrate. I drink 20 ounces of spring water. And then that's important because you have to have, number one, you have to have liquid. You have to have it. Your brain will function better. Your muscles will be hydrated. You'll get less muscle cramps. And generally, I have a half a banana, and that'll give me potassium because standing in one spot or if you sit, I don't like to sit because my back won't let me do it. But if you do that for a long period of time, you'll get crampy. And I'm not sure if you ever stood or sat in front of charts for a long period of time and you start getting that crampiness in your lower back or somewhere in your body, or you get a muscle cramp somewhere, you can't focus on the chart. You're worried about that damn cramp that's going off. So one of the best things you can do is start your day with hydration. And then I stretch. I go through a routine of stretching. And that's about all I'm going to do for this discussion here, because everything else is obviously shown in that tweet months ago. But what I do is I refer to the economic calendar again, because when you wake up from a nap or if you slept overnight and you're getting ready to do your morning session in trading, it's very easy to lose your bearings. You ever wake up, and I'm 50 years old, And I've had episodes in the last 30 years where I woke up and literally felt like I was late for school. I haven't been in school for a long, long time, but it's just weird how our minds are so powerful when we're sleeping. And when you wake up, you are in a altered state. Like you're not really awake yet. Your eyes might be open. Someone may be talking to you and you're looking in the direction that they're talking, but you're not really there. So you have to obviously refer back to what it is that you're going to be doing, because you could remember something about an economic calendar event. And I've done this. Okay. So I thought that there was going to be a report due and it wasn't due. And I'm expecting something in the marketplace and then realize, oh, what am I doing? I'm in the marketplace trying to do something and that's not even due out today. Or if I'm waiting for an 8:30 morning news embargo to lift and there's no news coming out. So I have to make the decision. Do I hold on to this trade idea if it's in drawdown and try to get out with close to even, or if I can squeak out a win from it, or do I just cut bait and just take the small loss because I did something incorrect? These are all things I have done coming up. Okay. So if you've ever had that happen, just know that you're in good company, because I'm not ashamed to say that I did those things too coming up. So you have to definitely review the economic calendar. Now, what economic calendar do I use? Well, I used to use Econo Day, and I mentioned that when I was on Baby Pips. And when I went to teaching predominantly Forex, I grew to appreciate and like forexfactory.com's calendar. I think it's easy. It's easy to manage and filter. I don't like looking at the yellow low impact events. I only looked at the pairs that were of interest to me, but always the dollar. And when I was trading Forex, it would be the euro dollar, the pound dollar, and the US dollar, and only medium impact and high impact news drivers. And I would toggle the little gray box because it would tell you bank holidays and things like that. But other than that, that's pretty much what I would use for an economic calendar. The review of what I thought would come the previous day. So in other words, whatever I thought my analysis would see in price delivery, for instance, what did I think was going to happen in euro dollar? Okay. Or what did I expect to see in E-mini S&P before I laid down? Okay. I have to revisit that because while I was sleeping, bombs could be dropping somewhere, a new virus gets released, some kind of boogeyman, narrative gets put in motion, or just simply, a collapse of some kind or something that I didn't expect. And I was wrong in my analysis. The market has done something that I didn't expect and I was wrong. So I have to recalibrate myself and say, okay, what did I expect before I took the nap or before I went to bed? And then when I go into the economic calendar, I have that reminded, because if I expect something to come into the marketplace in terms of volatility, that's what the high impact and medium impact news drivers are for. We want to know when it's likely to increase in volatility. Okay, it's one thing to be like in an earnings season. Like in earnings season, futures, they get wild many times after the close. Okay, and we also know that in Forex, we don't really have earnings season, but we do have economic drivers that come out and they're set to a specific day and time, much like a TV guide. Okay, I'm a child of the 70s. I was born in 1972. And when we grew up, all you young guys and gals out there are used to having the TV guide or the guide on your remote. You push your button and it tells you what's on TV right now and what channel. And you can scroll ahead in time and see what's on. We only had that luxury with a little magazine, and it was a TV guide and it was published every week. Well, these events or not topics, but these events and or opportunities in trading are basically scheduled like TV programs. Okay, your high impact and medium impact news drivers are scheduled well in advance. Like you can see 2-3 weeks from now when these things are coming. So you're not surprised by it, or you shouldn't be. Okay. So by having that understood and what days of the week are likely to create these increases in volatility, so you know what that volatility is going to bring with it, the strong likelihood of manipulation. And that's one of the key factors or ingredients to what we're looking for smart money. We want to see some type of manipulation. And I'll get to what that manipulation should look like in a moment. But I'm referring to the economic calendar, making sure rather that I'm in front of the charts for the right reasons and I'm following the right market. So if you're a Forex trader, you want to be looking for your pairs that have the currency news driver that has a high or medium impact news driver coming out around it. It'll tell you the time. And most of the time it's 8:30 in the morning, or if it's US based, it may be something like 9:30 or 10 or 10:30, like for crude oil inventories. And you can trade Canadian dollar, just on that report alone. But referring to your previous session or before you went to sleep's analysis, is that still hold true? Or does it hold true? Or has something changed while you were away from the charts? If it hasn't changed, then you go through the process of trusting it. And what type of analysis would that be? Well, number one, I start everything on Saturday. And I look at what I think that weekly chart's trying to go to. Is it going higher or is it going lower? I'm not trying to predict Friday's closing price. I don't teach my students to try to predict the Friday closing price, okay? So many folks have listened to me, taken things out of context, and spread so much misinformation about what it is I do as a trader, how I teach as a mentor, and what my students are focusing on or should be focusing on. They have made so much more confusion. And this is why another reason why I hate when people try to teach my stuff, because you don't know what you're doing. Watching a video, listening to a video series, you don't know. And just repeating what I'm saying, you don't know how to answer a question when someone gives it to you. How do I know? Because those same people that are running mentorships are asking me the questions in my forum so they can answer their customers. Yeah, I know. So if we know that the weekly chart is likely to go higher. Now, when I say if we know, how do we know? Well, we don't know with 100% surety that it's going to go up or down. Our analysis is never guaranteed. That's why we have to have stop loss. But I want you to think about how when you watch me trade these intraday movements and I'm on a 1 minute candle. Okay, number one, I'm canceling out all the arguments from the Goldman Sachs boys that say it's just noise and there's no pattern. Okay, there's no consistency or continuity found in lower time frames. These are people that don't know what they're talking about. And you've seen now students and me do this consistently with precision. But what I'm showing you is where I think the market's going to go to, the draw. Okay, that's the first question you need to address on Saturday, or if you do your analysis on Sunday. Some of you are probably listening to this after church. That's fine. But whatever that day is on the weekend, Saturday or Sunday, that is the day you're focusing on. Where do you think that next candle, when we start trading on Sunday evening and the markets open up, is the market going to expand, not close high or low? Is it going to expand? Is the largest portion of expansion in that weekly candle? And what do I mean by that? If you were to measure the highest high and the lowest low after the week closes, okay, was there more expansion upward or downward? That's the question that I teach my students to aim for answering on the weekend. You're looking for that. Okay. That gives you the absolute strongest bias filter you'll ever fucking find. Okay. Because what you're doing is you're patterning it off of large institutional flows. Ooh, what does that mean? Well, large institutional flows are big funds, big hedge funds, big deep pocket entities. Okay. And they are not trading on 1 minute charts. Okay. They can't put their size into the marketplace on a 1 minute candle. So they require weekly and daily levels. And that order flow that comes through that time frame, that's the elephant. That's the trail of elephant footprints that we're looking for. And smart money is a big elephant. It's lumbering. Okay. It has to take a long time to work in its orders to get into a position. Not the start of a position. Obviously, any position entry that constitutes their participation, obviously, right? But they can't put all of the size that they want on just in one trade. Like you go in and put in your 10 lots or your 5 lots or whatever, and it's done in one clip. Boom, it's done. They don't even break the order up. But large entities and large hedge funds, they have to break their orders up and they scale them in. So they're requiring a longer term price swing. And we derive that from the weekly chart. So the weekly chart, the only thing we're trying to do is capitalize on focusing on the next expansion on that weekly candle, removing the importance of knowing how it's going to close. We don't care. We just know that if that 1 minute candle that I show you example after example after example of how the market moves from a order block or runs out liquidity and runs for buy side liquidity, whether it be a single high or a relative equal high, that draw on liquidity is the focus of where I think price is going to go. I'm holding that trade until I'm stopped out or it reaches that target, the draw on liquidity. So for the sake of argument and understanding, let's just say that we believe that that 1 minute candle that we are trading in is bullish and there's buy side liquidity above relative equal highs. When a trade is entered, or for instance, when I have entered a trade and you watch these videos pan out where the market just keeps going up and up and up, and it might have small little retracements, but it ends up going to where I'm aiming for and my limit order gets hit. Every individual 1 minute candle, think about that same 1 minute candle as a weekly candle and apply the same logic that I outline in my 1 minute setups. Apply that to that weekly chart. It just takes a whole lot more time to submit to it. So when we're looking at a weekly chart, we're not just trying to guess on the next candle without any kind of logic or rationale behind why it should go up or down. We're looking at where has it been? Did it just take sell side? Has it taken sell side and has yet to trade up into a sell side imbalance, buy side inefficiency? Or has it taken a level of buy side on the weekly chart yet? If it hasn't, guess what? It's likely to continue going up. So that's how easy it is for me to say, I expect this week to have a expansion on the upside on the weekly chart. So if that's the case, that makes me trust initially going in, I want to be in a buy model. So my weekly analysis is framed on, I predominantly want to put my larger positions if I'm going to be trading intraday. I want to be focusing on being a buyer, and I'll do full maximum leverage if the trade is viable. It doesn't mean I won't sell short. It just means that if I do sell short, I have to do half or less than what my full position would be on if I was doing a long in a buy model. I'm going to say that again because you probably just didn't even listen to it. And it doesn't mean anything to you because you want to hear something else. But what I just gave you was gold. If my bias for the week is bullish, my largest leverage, pyramiding, building up, using the largest positions I can put on initially and keep adding as equity allows me to do so, I will do that in long positions. If I'm going to go short anytime during that week, I must be at 50% or less of the largest leverage I would use as a trade that week. Because I'm going against what? I'm going against the order flow on the weekly chart. So I'm already building in and tamping down the likelihood of a big drawdown because I'm not opening myself up to potential losing trades with maximum leverage. Just because I'm good and nimble intraday, I'm cognizant that I can be wrong. So I build in these safeguards as best as I can and still be able to engage a short position if I'm in a buy model. But I'm not going to hold on to those shorts very long. I'm going to pick the easiest short direct run to a target and be done with it. And it might go many times farther than where I get out at. And I don't care because I'm going to go right back into looking for the next run on the buy side. You see what I'm saying? I'm filtering out the best of the best. But if I want to participate in a bullish market but sell short, I'm building in all of these ideas that would limit my exposure but still allow me participation. But also reminding myself I'm selling short in a market that I know is more likely to go higher. So I don't want to overstay my welcome. And what does that mean? Holding on to a trade too long or turning it into a swing trade. Or, oh, I was wrong about my weekly analysis. So now I'm going to hold on to this longer and look for even bigger objectives and move my limit orders down farther. And then have it turn against me and stop me out. Even if I've taken partials, I don't like that feeling. I like being out when I want to get out, and I don't mind leaving some meat on the plate. Everybody's got to eat, right? So you're referring to that weekly chart and defining whether or not you're going to be in a buy model or a sell model. And that, again, is defined by, do you believe the largest expansion from the open is going to be up or down? You're not trying to predict that weekly close. That's very liberating. When you come to terms with that, it's not complicated. All you're doing is you're subscribing to the same things that we look for in these intraday charts when the market's still drawing towards a old high or relative equal high, or if you're bearish, let's just say the weekly candle, you're expecting it to go down, the larger expansion going down, because it has recently, in recent weeks or in months, it has taken buy side and it's been dropping, and you can see clearly it's reaching for an old low, or it's about to reach into an imbalance, a buy side imbalance, sell side inefficiency. If it hasn't reached into it yet, then that means what? I'm going to side with the likelihood of the next weekly candle or the one that's about to open up tonight. And I'm not saying this is the case for this particular week. I'm just giving you the routine as what this topic is. Then in those instances, I would be in a sell model. That means I would be doing the largest position in leverage on my shorts. If I'm selling short, I'm going to be willing to use the largest leverage that's available to me. But if I go long anytime during that week, I have to be at 50% or less, whatever my largest maximum leverage would be if I was going short in a bearish week. Okay, very, very important. Very, very important. Those things helped me a lot in my 6th and 7th year. Once I figured out what I was trying to do, that kind of kept me from wrecking myself, because it would be harmful for me to just, I guess not, no, to eliminate the idea of getting drunk with the volatility of buying and selling, because I can do both just about any market condition, unless it's a one-way straight, rip rate from like a CPI type of event. you're not doing both directions in that. With those instances put aside, I can buy and sell in a market condition pretty much intraday. I can do both sides. But just because I can, does it mean that I should just do it because I can? No, I want to maximize when it's on the right side, when it's in line with that weekly expansion, because I'm in line with the large flow. Large institutional order flow on the weekly chart, if it's bullish, or if I'm anticipating it to be bullish, I want all of my emphasis on being long and the leverage behind those trades to be at the maximum there. I don't want to be maximizing my risk and use the largest leverage in a time when I know in my analysis that it's likely to go higher based on the weekly analysis. I don't want to be going short with the largest leverage, because what I'm doing is I'm inviting the market to whip my ass and to do it the best way it can with the maximum effect. So I want maximum effort on my side. I don't want maximum effort on the risk side, where it could punish me, much more than I would want to suffer. So that's the reason why I do that. But when I go through the economic calendar and I remind myself of what I'm looking for and when the volatility should come into the marketplace, when does those high impact or medium impact news drivers come in? And then I'm waiting for that to occur. If my weekly analysis is aiming for or indicates to me through my own interpretation that it's bullish and I'm in a buy model, I prefer to see some kind of bearish drop at that medium or high impact news driver, preferably into some kind of buy side imbalance, sell side inefficiency, or below relative equal lows, or a single 15-minute candle low. Now, 15-minute is my bellwether. Like, I could trade everything in every model that I know. I can use just a 15-minute candlestick chart and do everything I can do, period. I don't need to drop lower, and I don't need to go any higher. I could just simply just trade off that. That is not an invitation for you to say, okay, ICT said that, so now that's what I'm going to do. Your bellwether might be an hourly chart. It might be a 5-minute chart. It might be the daily chart. It might be a 4-hour chart. Don't let me, as your mentor, influence you and you copycat every single thing I say I do. That's the worst thing you can do as a mentee with anyone. You have to bring your own personality, your own influence, the things that are meaningful to you, your signature, your fingerprints. They have to be all over this. You can't just say, I took ICT's 100%, everything he said verbatim, and now it's mine. It might be for some of you, but I don't want that. I'm not trying to create copycats of me. I'm interested, very, very interested to see how all of you adopt this idea and formulate your own approach using the tools and concepts, because it's all going to be slightly different and you're all going to get a unique result, and you can all be positive. You can all be making money on the same day doing different things. That's the beauty of this. It sounds like it can't possibly be like that, but it's exactly how it works. And vice versa. Sometimes you'll have winning trades and other students that will be doing this very same thing you're trying to do. They'll have the opposite result because they're bringing in their problems, like I mentioned yesterday. So back to the routine. See how easily I could have went down some rabbit trails there. I actually listened. Hear that? I have a bullet list here I'm going through, so try to keep me on point. It's funny, when I have a deadline, like yesterday, my wife said, look, you got to do this. You got to be real quick. And, I just went on and went on without having anything written down. Today, I have the run of everything. She's not here, and she probably won't be home till tonight. And I made a bullet point list of things I wanted to cover. And I don't know. I should have did this yesterday probably, but whatever. So you want to review what you thought was going to happen on the weekly candle. Go revisit that. And here's something also you want to do. You need to have a pen or pencil, some kind of writing instrument, and a pad next to you while you're trading. Because on that piece of paper or that pad, you have your weekly analysis, what you think it's likely to draw to. Because here's the benefit of doing that. If you do not have the expectation of where that weekly chart may be reaching for, you might get completely out of a position that's running right for that and leave 30, 40 handles if you're in S&P, or 80 pips in some instances on a Forex trade, because you just felt like it was time for you to get out and you abandoned where you thought that weekly candle may be reaching for. When I was a younger man, I learned a very hard lesson doing that month after month after month of knowing where it's likely to go, but growing in my trust to get to the point where I can say, okay, I'm going to leave something on. And how do you do that? Take as much as you can off and leave the smallest portion you can leave on a trade open until it hits it or stops you out. That's the way you get to that trusting factor. How do you get through learning how to hold on to these trades to get to these targets, ICT? Because if I was up a little bit here, my mind would say to me, let me get out of this because it's uncomfortable and I'm scared it's going to turn into a losing trade. How do you get through that? You get through it by holding on to it. You put your stop in a position where preferably it doesn't gap up above your entry, and that can always be a risk. Every one of these markets can do that. So in that regard, stop losses won't work. But barring those instances, your stop loss moved into a position where if it moves up to you and before you entered, or better than where you entered, in other words, if you were short, your stop loss is below your entry, you are sitting in that position there and you have the smallest position open and you hold for it to hit your target and you don't trail your stop loss anymore. You just let it go. And you grow in confidence over months and years, folks. It takes years. These yahoos out there trying to tell you can learn this stuff in a couple months or a couple weeks or a 1-week boot camp are full of shit. Okay. You can't. You cannot teach somebody how to get a 200-to-1 fucking trade, okay, in a 1-week fucking boot camp. And they're teaching you trading and they're only showing nano lots in their fucking live accounts. Get the fuck out of here. But you're reviewing that weekly candle analysis and referring to that economic calendar. So that way you know the stage is set and you're looking for something opposite to what you anticipate in terms of directional bias on that weekly chart. So in an example, say you are looking at the pound dollar for Forex traders, okay? Oh, he's talking about Forex. Oh, yeah. I've been tired of hearing about this S&P shit. Come on, ICT. Come on back home to Forex. Actually, I am home with commodities, but nonetheless, say you're interested in pound dollar and you think that the weekly candle is going to expand higher based on your analysis on the weekend before the markets even open up. You think that there's reason for that weekly candle to go higher because it's been going higher and it's likely to go up to a specific old high or trade into an imbalance, a SIBI, or a fair value gap that's above price. Okay, I'll differentiate between SIBI and BISI before I close this, because I know some of you are probably chomping at the bit to dial in on the ICT on the wire here and ask me what's the difference between the fair value gap, BISI, and SIBI, and could you tell us the difference? And I will. Just give me a second, maybe longer than a second. But once you have that weekly analysis and the calendar lined up, you now have a stage set for British pound likely to go higher. So you're in a buy model. And then there's a report coming out in the morning for pound as a currency. What you want to see is there a low on the 15-minute candle where sell side liquidity will be resting? Or if that low is really far away from market price, what is that? Well, it's relative to what your understanding about price is. There's no way for me to say it can only be this many pips. That's that gray area that experience is going to dictate. But if it's within, I don't know, 40 pips, anything more than 30 pips, I think is a much more meaningful move. And it's probably not a run for liquidity. It's probably going to just keep on going. But don't use it as a hard rule all the time. It's just a general rule or general principle that you can go by. And why do I use that? If you've studied my concepts with the Judas swing in London, where the London session usually creates the high or low of the day, it has a 70% likelihood of creating the high or the low of the day. If you are in a sell model, and if you are in a seasonal tendency that's bearish, and it's an obvious draw on liquidity for sell side, all those factors being equal, then you do have a 70% likelihood. Because I see all these guys out there trying to run reports and statistics. ICT said it's 70%, and it's really not. I can see it's here that there's things that you didn't include. I just gave them to you right now. So go crunch your numbers. But those factors of looking for about 40 pips maximum is based on several things. And this is where you should be writing things down, folks, because if you're just driving down the road, chewing on your bubble gum and corn chips and shit, that ain't going to be good. You're going to have to come back and listen to this and write down some notes. Generally, from the open at midnight to the high of the day, it's usually within 30 pips that it makes the high of the day. Sometimes, in some weird instances, it'll go as much as 40 pips. Why 40? Because sometimes you'll cross and breach a big figure number, for instance, a 0-0 level. Okay. And if that's the case, the algorithm can many times spool or spread beyond a particular level, run past it, in other words, as much as 40 points or 40 pips. So that's why I use 40 pips as a general rule. And if it goes beyond 40 pips, then it's probably not going to be a sell-off. It's probably going to keep going higher. Or it means I need to sit on my hands and do shit. Nothing. Just go back to bed. And then I'll trade the New York session. Okay, so I just tossed it in there, no extra charge. But using our example for pound dollar in the New York session, if we are expecting something bullish, our weekly analysis indicates that we're in a buy model. There's a high impact or medium impact news driver coming out at 8:30 or so in the New York session, all New York local time. Everything is always New York local time. Stop trying to take your shit in your chart and line up to your local time because it makes sense to you. Everything in these markets are always going to be on Eastern time. I don't give a fuck who tells you different. I don't care how long they said they've been trading. I don't give a fuck. Okay. That's all bullshit. Everything, all these algorithms is doing is running on New York time. Midnight in New York, that's the beginning of your fucking day. It's not Wellington. It's not Asia. Okay. It's New York midnight. That's the opening. Okay. I don't give a fuck. Anybody tells you different. That's the way it is. And you bring them, if you're here listening, you bring your shit and I will run right with you and I will run fucking circles around you and show you exactly what these fucking markets do. But you're going to fucking be schooled. So don't talk your shit in your little private little circles, okay, your little fucking webinars, talking all your bullshit because you ain't getting the balls to come here directly. You do it right here and I will run circles around your motherfucking Mickey Mouse ass. Clown. UK boy. So once you have that, you're waiting for price to either drop down, no more than 40 pips, down to a low. But if it runs down below a low that's lower than 40 pips, you don't do anything. You leave it alone. You wait. Just let that go. But if there's a low that say it's at 40 pips, lower than the market price, before that news driver comes out at 8:30, you look inside that low to where the market price is now. There should be a price leg that has moved up. Is there a fair value gap in that? If there is, then you're anticipating now that the market drops down into that fair value gap and not below the low. Now, here is that point of contention that every student of mine has, even private mentorship students. They want the silver bullet answer that says, okay, here we are. We're at the brass tacks. This is where the rubber meets the road. ICT, lay it on me, baby. This is it. Hear that? That's excitement in your voice. You're talking to yourself, and I'm not in the room with you. How do I know, ICT, that I can buy that fair value gap and it won't go below the low? Are you ready for this one? Ready? You get your pen and your paper? Write down this. I don't fucking know. You don't know. That's why you put a stop loss there. Are you fucking kidding me? Yeah, that's it. But what happens if it goes down there and I get stopped out? What you do is you wait for it to create a short-term high. And then if it goes back below that short-term high, that's a shift in market structure. Wait for another fair value gap. Then you buy that one with half the risk that you lost on the first trade. If you lose on that one, you're done for the day. Done. Done. How's that fucking complicated? It's liberating. You don't have to know. But if it does happen to you adversely, you know what you're going to do. And if it happens again as an adverse effect and you lose, you're done. You're fucking turning the charts off. You're done. That's your morning routine. You're done. You did your 2 trades. You've lost on both of them. You're done. Or the second one wins and you recuperate some of the drawdown, if not all of it, and maybe go into profit. That's the part that's going to separate all of you from the people that stick with this. Because if you can't accept the fact that you're probably going to lose and it won't change anything, it just takes a little bit away from you. Just like it takes away from your fucking gas tank when you drive to your fucking slave job. Okay? It costs you money to go to work, but you don't ever look at it like that. It costs you toll money to get to work, but you don't look at it like that. That's a fucking loss, okay? Your stop loss is getting hit every fucking day. As soon as you start that car up and you're driving down the fucking road, your stops are getting hit. It's costing you fucking money. You got to replace a fucking tire. You got to replace your tires. You got to change your fucking oil. Guess what? That's drawdown, baby. It's all about perception. You're running around with blinders on. You can't do this and not lose money. You're going to lose money, but you have to manage effectively how you lose it and come back from it. So you're going to do one of those 2 things. You're going to look for a swing low. Now, if it's less than preferably 30 pips, that swing low on the hypothetical example of pound dollar, I would, even if it had a fair value gap, I would give it the likelihood or the opportunity to trade below that low, especially if it's a high impact news driver. I would look for it to potentially run that low. But if we trade down to the fair value gap in that low, if it's less than 30 pips, I sacrifice that entry that would have been at the fair value gap because I'm waiting to see if it wants to take the low out. If it takes no interest in going below that low and it reacts at the fair value gap, then what I'll do is I'll buy the next down close candle as an order block. That's it. Isn't that straight to the fucking point, folks? Okay? You young guys, get to the fucking point. You can't get any more to the fucking point than I'm doing right now. I'm literally giving you IPTA step by fucking step, and you're still gonna fucking complain. Whatever. So what you're doing is you're determining if you're bullish in a buy model, you're expanding higher on the weekly candle. You're waiting for opposing price direction at the time of the news driver being released. Okay, so whatever, like an employment number or economic number that comes out, you're expecting the algorithm to reprice lower, and that's going to get all the retail traders wanting to go short. That's exactly what you want. That is the green light go you're looking for. You want to see something opposed to what you think the weekly candle is going to do at that time of that report. That's manipulation. That's the trick. That's the broken wing trick that the robin does to protect its little fledgling that's trying to teach how to fly. You ever seen that, a robin on the ground, and you see it? It sees you before you see it, and it starts chirping real loud, and it starts putting its wing out to the side like it's broke, and because it wants you to chase it. And once you get close to it, that fucking wing's perfect. It flies away and it's laughing at you, but you don't see the baby it's distracted you from. Well, the market does that same kind of thing. That's a Judas swing. It leads you down the primrose lane. It makes you think you're seeing something that's valid, but it's not. And it catches people that are offside because they're ignorant. They have no idea what the fuck they're doing, and they're chasing excitement. Just like a predator. They want to chase the thing that's running. Well, when the market runs, think about what that's done. You have all these people that are neophytes. They're traders that have no idea what they're doing, and they're just anticipating doing something next, but they don't know what it is to do because they're looking at these candles forming and they have no idea. But when there's an excitement and it moves really, really fast low, real quick, sudden, what does that mean? Oh man, I'm missing it. FOMO kicks in, fear of missing out on the move. It's already dropped 20 points. Man, it could go 100 points today or 100 ticks today. And I don't care if I missed the first 30. Let me just get in there right now at down 32 ticks. So you shorten, or they're shorting rather, into that move when you're looking to go long. That's smart money. That's what institutional mindset is. Okay. You're looking for the opposing view of what you're trying to do. That's that market efficiency paradigm. Remember month one in the core content? That's what you're doing. Smart money is a small little circle of entity that uses the greater community against themselves. But they have to have that smaller community to act as a counterparty. So they use enticement, they induce the excitement of seeing these big movements, and it trips them up. And they're rushing into the marketplace with liquidity. What are they doing? That big drop that occurs. Let me say this. This might not occur in price. And if it doesn't, you do nothing. But if the market does drop, and all things being equal that I've outlined here, these are the things I would do to get into a trade. But that rush for retail or street money traders, the people that don't know what they're doing what? They're selling at the market. Sell, 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 sell. So what is actually occurring? They're drawing in and engineering sell side liquidity. Why would they do that? Because they want to buy it. They have to have sellers at a lower price. Oh shit, the tumblers are turning, aren't they? Woo! You're getting there, aren't you now? You're learning some shit. Never expected that on a Sunday. Some of you are listening to me in your headphones right now, and you're wondering if the person next to you at the church pew thinking, did he just hear ICT, this holler and whistle? They're probably listening too. Don't worry about it. So you're looking for sell side liquidity when you're bullish in a buy model, in a Judas swing that's going lower in a high impact or a medium impact news driver, or you're looking for a BISI, a buy side imbalance, sell side inefficiency, where it's like a fair value gap, where the candle that we'd be focusing on would be a bullish candle. Okay. So fair value gaps are the classification. Okay. That's the imbalance. And to set this record straight, it is not in any George Engel books. There's a fucking clown out there trying to say that this is taught in George Engel. In fact, I'll fucking prove it to you. I'll thumb through real quick and show you there is no fucking reference to a fair value gap in Winning in the Futures Market by George Engel. Okay. I have the book. You can look at it too. It's on fucking line. It's not in there. $500,000, find my shit anywhere before 1996 in print or in video, anywhere. You won't fucking find it. Go fuck yourselves. So you're looking for one of two things. If you're bullish, you're looking for sell stops to be rated or engaged. Or if you're looking for a fair value gap, preferably if you're trading Forex, it's preferably less than 40 pips below the market price. In other words, the market price being right before the news event comes out, or preferably below 30 pips. Okay, so that factor further increases. Let's assume if you're bullish and say London, we'll ring in London too, because this is what makes New York better, in my opinion. You have the added benefit of knowing what London has done. Let's now say that we had a previous late session low in pound dollar the day before New York midnight for today's hypothetical trading day. And overnight in London, we traded down below that, and then we had a nice reaction higher. And we drifted back down, and say that drifting back down is inside the leg that was created from the London low to the market price prior to the news report coming out at 8:30 in our hypothetical example where we would potentially be bullish on pound dollar. These things are further amplified in terms of odds in your favor, because now you have that likelihood of the London low of the day is in place. And now you're not going to see much of a retracement lower in that leg because they don't want to get close to that low. It's already locked in. So they're going to be reaching for a higher time frame buy side liquidity pull, or where that weekly chart's reaching for. It may not reach for it and arrive at it that particular trading day. It may require another day later in the week, because we're looking at a weekly expansion. The weekly candle is generated over what? The course of the week. That doesn't mean that it can't happen where the largest expansion occurred on that one single day, whether it be Monday or Tuesday or whatever one particular day it could have been. All the movement can be done with a report day, and then could be quiet, before or after that particular event. So you have to have all that factored in, which is why it's important to only be focusing on medium or high impact news drivers, because you will be less likely to miss the moves if you do that. Now, it doesn't mean you can't trade on days without high impact or medium impact news drivers. It just means that all things being equal, and whatever's in motion will tend to be in motion until we get to the report day. Or in layman's terms, if it's been bullish and a buy side liquidity pool hasn't been reached yet, if there's an absence of a medium or high impact news driver on that particular trading day, I'll still trade long. And that's fine. I just won't push my maximum leverage. I won't pyramid a lot in that particular type of day, because it might not create a lot of movement. So why should I build my positions large? I want to do that. And once I've seen the manipulation, it showed me its hand like a poker table. Okay. I've seen my player's hand. So now I'm going to play mine strong. I'm going to go all in. I'm going to build and build and build, because I'm on side. I'm on the right direction because of my weekly analysis. It's indicated to me that they enticed the street money to come in going short at a time when I'm looking to go long. And one of two factors I'm looking for. I'm looking for sell side to be taken. If it's too far away to reach for it reasonably, then I'm looking for a fair value gap. If it doesn't have a fair value gap, here's a third. Okay, because just like on roulette, it's not red and black. It's red, black, and green. And green can fuck the whole show up. Green is there is no fair value gap, and the low is too far away to consider. It's beyond 30 or 40 pips below the market price. So what do we do then? You wait. You wait for the market to create another run higher, short-term high. It trades back down, and once it breaks that short-term high, now we have a shift in market structure. Follow the narrative. Do everything I just outlined before. Look for a fair value gap or a run below a low and submit to it. You might have to do a secondary trade with less leverage if you get burned on a fair value gap entry. But that's my 2-trade rule on it. And if I lose on both, I'm done. I have to wait for the PM session, or I just simply stop for the day. That's it. Is that complicated, folks? Now, for someone that's new, now I'm not going to be unreasonable here. For someone that's new, the terms I'm tossing out here and some of the logic I'm saying, if you've been around me for a while, this might seem like, wow, this is This is really complicated. Just give me a fucking moving average, pal. Give me a moving average and a stochastics, man, and call it a day. This is too much PhD shit, piled higher and deeper. No, this is algorithmic principles being articulated in a straightforward manner, right to the fucking point. You asked for this shit. Now you have it. What are you going to do with it? That's what I'm interested in. And then obviously you're just going to submit to the draw on liquidity based on that weekly chart. Now, there are smaller draws on liquidity in the intraday charts, and you see me referencing them all the time. Why do I do that? And why don't I do that with the weekly chart? Because that's the work you're supposed to be doing. How many trades have you seen me share? How many things have I articulated before I even put the trade on? I say, okay, here's the direction I'm looking for because I'm looking at a particular price level. I'll say, note this on your chart. So if it's above the market price when I'm tweeting that, is that bearish? Fuck no, it's not bearish. And there's people still out there thinking, well, why'd you go long? Aren't you bearish? What the fuck would I be looking to go short for if I'm pointing to something 30 fucking handles above the market price? How is that fucking bearish? That's an unrealized objective. It's below where market price is. That means I'm fucking bullish. I'm looking for a reason to go long. It might not be there yet, but I'm looking to get up there. Vice versa. If I say, here, note this on your chart, and it's below the market price, that means what? I'm bearish. I'm going to be looking for something. Looking for what? Some of this shit I just outlined here. Not limited to, but that's predominantly what I'm trying to do. Looking for a way to on-ramp and get a ride to that, okay? Or build a bridge to it. And that's what I do in the morning. Now, it took more time for me to outline it, explain it, give you different, well, instances where you might have to contend with certain things and certain factors and weigh out whether or not you want to do something. But by far and large, it cuts right to the meat. Trims all the fat off, all the bullshit. It goes right to what are you trying to do? And folks, let me explain this to you, okay? If you doubt what I just gave you is not fucking platinum, go back and look at every fucking move in the last 6 months. And you're going to see one of those two instances. And for the assholes to say, oh, but it didn't work here, use the alternative things I've told you, and you'll get it. Period. If you lose on the day, you must consider using half of what you risked in your next trading day, whatever that trading day would be. If it's the next trading session, if it's the next trading day, if in other words, if say you were trading 10 contracts in the S&P and you lost, okay, on your first trade, then you drop down to 5 contracts on the second trade. If you lose on that, you're done for the day. You cannot take another fucking trade. I don't give a fuck about 5 trade fucking Larry down in fucking Texas, okay? You stop. You don't have the control factors that is required to stay solvent right now. You're learning. So don't be doing this. I need to do this because this guy does 5 fucking trades. He's got Trump coins. He's flipping fucking quarters. Fuck that shit. You have to limit your exposure. You have to do that now in the beginning, because if you don't, you're going to develop bad habits, or you're just going to blow your fucking account, and you're going to discourage yourself before you even give yourself a real chance to do this and succeed. But if you take 2 trades and they both lose, you took one at 10 lots, you lose. You take one at 5 lots. That's half of what you leveraged on your first trade and lost. The next trade, you're taking 5 lots. If you lose on that one, you're done for the day. If you win on that second trade, regardless of what the win is, you're done for the fucking day. You do not trade in the PM session. Done. But Michael, shit, you don't fucking trade again. You won. Leave it there. There's other trading opportunities. Stop fucking thinking that one trade idea, that one particular trading session is the be all end all. That's your fucking career. You're trying to encapsulate your entire fucking lifetime career in that one trading day. The fuck is wrong with you? Stop thinking like that. That's what every neophyte retail losing fucking prick does. I'm telling you, because I did that same shit when I was 20 years old. Stop. You have to expand your expectations beyond that right now moment. How is the decision you're about to make right now going to impact your career? Is it going to fucking end you? Are you going to invite the ending of your career in that one trading session, that one trading day? because that's what you're really fucking doing when you break these rules. So when you break them, don't fucking cry to me. Don't you dare send me a fucking tweet saying I didn't listen, because I don't want to see it. Because I've given you reasons now how to avoid it. I've given you the logic on how to avoid it. But if you take in one trade at 10 and you lose, you take another trade at 5 contracts and you lose, you stop trading. Whenever you trade again, whether it may be the next trading day or next week, say it happens to be on a Friday, okay? My best advice is if you had a winning week, don't trade on Fridays because you'll regret it. If you lose, you're going to want to get back to what you had as an equity high for the week in such a short little period of time. And the market generally tends to get real quiet towards the end of the Friday week close. And you'll think you see shit in the charts and it won't be there. And you'll lose more. And you'll go into the weekend hating it. Because either you gave back the weekly gain or a large portion of it, and you could have been feeling good about it on the weekend saying, you know what? I didn't trade on Friday. I had a good week. Why push it? Why? Why the fuck do you need that? Because you're trying to increase your social media equity curve, and that's a fucking loser's game. Don't do that. It's about making fucking money and consistently keeping it. Fuck their opinion about you or me. Who gives a fuck? Do you think any of this shit that these people fucking say about money's changing anything? It hasn't. So don't worry about it. Don't factor any of those fucking things in. Keep your results. That's the focus. And follow the fucking rules. But whatever that next trading day is, whether it be the next trading day or the next week on like on a Monday, if it's been Friday, you did this 2-day or 2 losing trades in one single day. What would you trade with if you lost 10 and 5? Well, you can't do 2.5. So just do 2 contracts. And you have to trade that 2 contracts until you make 50% of what you lost when you lost on the 5 contract losing trade. Once you get back to 50% of that, now this is the highest form of what I do. You shouldn't, in the beginning, you shouldn't do this. You should recoup the full loss that you took at the 5 contract loss. And then at that point, then you can go back to trading 5 contracts. And when can you go back to 10? When you make what that losing trade was when you lost on 10 contracts. You have to be organized. You have to be diligent about keeping records of what you did, how you lost the money, and how do you build it back systematically, soberly. You're not trying to go out there and just roll the fucking dice. It's not fucking Las Vegas, folks. You got to go in here with a principled mindset, knowing that you can lose your fucking ass. Don't take stupid risks. Don't guess. If it's not obviously in the chart and if the conditions aren't ripe where the production of a result that is favorable isn't likely and more in your favor than not, you don't fucking trade. You don't do that. You simply observe. And if you don't know when that is, you haven't been studying and backtesting and tape reading long enough, because you're going to know when it's obvious for you to get in. Right now, you're all just itching to get that feeling of winning the fucking lottery like it's a scratch off. That's dumb. That's a loser's mindset. You don't do that, folks. You don't do. Traders that make money consistently, they don't fucking guess. They don't guess. We know exactly what we're fucking looking for. We're waiting for it. If it doesn't materialize, we sit still. And we don't give a fuck about Tom, Dick, and fucking Harry on social media and what they're claiming they did. Does that make sense? Has anything I've outlined here seemed overly complicated, except for the folks that don't know my terminology? Or if you're too green and have never really looked at a chart and understood the references of the weekly chart versus an intraday chart, I understand then it would go over your head. But if you spend time with the content that I've put on my YouTube channel, you come back to this video or come back to this discussion or this recording, and everything I just outlined for you is a fucking pathway to the fucking bank. It's consistent, folks. What I just outlined here today, you'll get this at least 2 times a week. And you only need one. You only need one to have a career. One winning trading day. And if you stopped, that's a career. See, some of you see what I do against these people that talk shit about me. I'll put example out just every day. Boom, 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 boom. And you think that's what ICT wants me to do. No, it's not what I want you to do. I don't want you to do that. What I want you to do is find your unique model that fits you, that fits your risk appetite, how you are comfortable with trading, your frequency of trading, and then live there. Bloom where you're planted. See, there's a lot of things I'm never going to fucking teach you folks, okay? I'm not. I'm not going to do it because what I've taught already has been abused. And there was other things that I was never going to teach you anyway because I'm not permitted to teach it to you. But you don't need to know those things, but I will absolutely showcase that shit in 2023. You got no idea what I'm about to fucking show. But you don't need to try to keep up with that. Just because you're my student, you don't need to do that. My interest, my whole fucking reason for doing this is I want to see you all succeed and see beyond your paychecks. I want you to have that feeling of knowing that you have something extra. Because that little bit of a help each month goes a long fucking way. When I was a young man, I'm gonna give you a little bit of a rant here, and then I'll open up for 5 questions. And please don't give me, yeah, I got 3 questions real quick. No, you got 1 question, and I'm moving on. When I was a young man, and I moved out of my aunt and uncle's house, I was paying room and board with them, $50 a week, and they more or less were like, "Hey, we were trying to give you a helping hand, not let you sit here and get rich." And I was like, okay, well, that wasn't the result of our conversation and where I was thinking we were going to go with this, but I felt uncomfortable, so obviously I had to move out. And I didn't know a lot about life in general. I had a very sheltered childhood. Um, I didn't know much about many things at all, really. And when I was living by myself, the rent wasn't all that expensive. I think it was like $416 a month for a 2-bedroom apartment. And buying furniture and buying things for the house and stuff, it was awkward for me because I didn't know I didn't know how to pick shit. And I was single at the time, and I was afraid if I bought the wrong furniture and if I started dating someone, they wouldn't like the furniture. And then it was because I'm obsessively compulsive. It was very, very difficult for me. And all these little decisions, these little things that I had to contend with would be a factor in my trading. Like these things, like I would be thinking, am I buying the right fucking color couch? Is that rug in the kitchen by the sink? Is that the right fucking color? Because if I meet this girl I'm trying to meet and she comes over here and she sees this fucking rug and she says anything bad about this fucking rug, I'm burning this motherfucking rug. Okay. The whole time I'm watching crude oil. Okay. The whole time I'm watching gold futures markets. Okay. I'm doing all those things and I'm worrying about this stupid shit. So I know if I had to come back up through this stuff, the climate that we have right now, where things are hard, folks, these markets right now, these are the hardest market conditions I have ever traded in. 30 years I've been around this show. In the last 3 decades, this is the hardest time to be a trader. If you are profitable and you're consistently profitable, you know what? My hats are off to you. I'm telling you right now, this is where you're separated. Like this is the division. If you can find profitability in these types of markets right now, you're a fucking amazing trader. You controlled yourself, you mastered yourself, and all of you, regardless of whatever style you use. I mean, I don't give a fuck if it's something outside of what I do. I'm not the only one that can make money, obviously. But my opinion about how you should learn how to read the market, I'm biased in that regard. And everybody has their own opinion. Everybody that has a course, everybody has a service, a program, they're all going to say they're the best. Okay. I get it. But anybody that's able to find profitability right now in the last 2 years, and you're consistently able to do so, you should be very proud of yourself. Because I'm telling you, I've never seen a market environment like this where something so trivial that can come out right at any time and the market goes to shit. unravels completely everything that you think you see in the marketplace. And you have to be very, very nimble. And one of the concerns I have going forward, and this is like one of the things I'm observing and studying, proficiently, or not proficiently, profusely. I think it's the term I'm looking for, profusely. Obsessively, let's just say it that way. I'm looking to see, do we deteriorate even more? And my obsessive compulsive disorder is flaring right now, because this is where I would be putting the control M in and going back and editing out, and then now saying it the way I wanted to say it. But I want to see, do we deteriorate more going forward? Does it get harder to trade? Or are we working ourselves out of those kinks in the marketplace where it's been very, very challenging, very, very difficult? Now, when I say that, obviously you can see that I can find setups and their precision is still there, but not to the degree that it was prior to 2019 and that type of climate. I want to see it come back, because if I can get that in 2023, you're going to see world history. But you could still see world history with this climate too. I want to see a little bit more participation from the group that I have created in terms of students, because it's tricky. It can present opportunities in the charts that may or may not be there, and it's very difficult for as an educator. I know what it's like to see potentially a setup, but if you have ignored what I've outlined here and talked about at the beginning of the space where I referred to the weekly chart, if you look at that weekly chart and you ask yourself, okay, forget that it's a weekly chart. Where does it look like it's reaching for? It's going to keep moving up or keep moving down until it gets to a specific level. What is that level? If it's going up, it's going to go to an old high, because there's buy side above that. Whose buy stops are up there? Large funds. There's a reason for it to go up there. Okay. It's not buying pressure that's leading it there. The algorithm is just drawing up to that. When it gets there, it doesn't know that traders have paired themselves with those orders. It doesn't have that understanding. It just knows that that's where they are going to be residing. The algorithm doesn't know where your stop is and doesn't know where my stop is. It knows where every pool of liquidity would be, which is common sense. It's above old highs and below old lows. And whatever has happened recently, sell side's been taken. Okay. Make it real simple, ICT. What's it going to do? It's going to go for an imbalance above market price, which would be a SIBI. And I haven't forgotten, I told you I would differentiate that. It's going to reach up into that. Or if it continues through that, that would be your first objective, to get into that SIBI, but then trade to an old weekly high to tap into buy side above that weekly high. Then we sit still. We wait. Because what are we waiting for? We don't know if it's going to reverse there, and we don't need to fucking know. You just wait and see if it does. If it doesn't and it starts to continue more, fine, no problem. You continue with the buy side and you continue looking for what's the next draw on liquidity on that weekly chart. That's the number one principle for knowing what daily bias is. Why should that weekly chart be going anywhere? What's it reaching for? And reverse everything I just said for when it's bearish. If we have recently traded into a SIBI and moved lower from it, and we haven't taken out a short-term low or trade into its nearby buy side imbalance, sell side inefficiency, the fair value gap that would have a green candle or bullish candle in between the two candles that would frame a fair value gap. If it hasn't traded down into that yet, that's your draw on liquidity. So until it does that, I'm thinking I'm going to sell model until we get there. Isn't that fucking easy? Isn't that easy? You need fucking harmonic fucking patterns on your fucking chart to trade. Why can't you just do this? You need all these moving averages and fucking indicators and shit on there. No. The things I do are not complicated. Understanding the language so that way I can communicate what it is that I'm looking for in terms of a myriad of opportunities. I have lots of approaches. I have lots of tools and concepts because guess what? There's lots of fucking opportunities out there, and they're not always cookie cutter. So you get these 20-year-olds, oh, ICT is too complicated. He's got too many concepts. He's got too many tools. He's got too many. Because I'm a fucking well-rounded trader. I've been around for a long time. I got a lot of fucking weapons in my arsenal. And the longer you do this, you'll do it too. You'll have one choice set up, one weapon of choice that you love using, your fucking bazooka. Okay. Mine's a 50 caliber Barrett. Okay. That's my one shot, one kill. I look for that each week. If I don't have it, no problem. I'll pull out my fucking 9mm and plink fucking shit. That's no problem. I can still take shit down with that. But I go in looking through my scope on my 50 caliber with what I just outlined right here. I don't need a fucking video to do this. I can explain it to you. And when you're listening to me and you're considering how you do your routine and what you've not been doing and versus something like this and how simple it is. It takes me longer to talk about it, even condensing it in the beginning, than it does to do it. And you make that a pattern, a routine that you do every single week. And in the beginning, you don't go in trying to predict it because right now you now have it. And the worst thing you can do tonight is, okay, the market's going to open up. Fuck it. I'm going in all in. I'm going to get funded, or I got a funded account. I'm risking it all. He's just told us the secrets. He spilled the fucking beans. I'm going to go out there and I'm going to get it. Well, you're going to get it. All right. You're going to get fucking creamed because you're trying to do something you don't know how to do yet. So now, since I've shared this with this community and everyone listening, I want you to go forward until February. Do no trades with this. Don't do any trades at all. I want you to use what I just outlined in this space, study it, and then you determine whether or not there's any validity to what I just taught you. Don't take my word for this. Don't believe any fucking thing I've said to you here or anytime anywhere, because everything I've said has always been an invitation for you to see what I've said is the truth. You'll see it in your own charts and your own results. You will see it. And it won't matter what anybody else says about what you're learning because you'll know it's real. And nobody can take that away from you. And the feeling of knowing what it's likely to do and it fucking paints in your own chart real time and you watch it come to pass, that's a feeling like, fuck. That's like knowing the winning lottery numbers every fucking week. Speaking of that, have you noticed the Powerball? I'm not a big lottery fan, but I did like the idea of it going up to $2 billion. And I told my wife, I said, they're gonna pull some fucking shenanigans. And they did. They fucking did. They didn't even do a drawing. They said there was an issue. Oh, there was something wrong with the fucking the counts. They had to do another count in some state or whatever. And we'll get back to you. Your tickets are stamped for that drawing that day. Okay. And then they don't even do a drawing. They said, here was the winning numbers. We did some other drawing, but it wasn't televised and we have no record of it. And here it is. And somebody won it in California. Oh, is that what happened? Some motherfucker in California got that $2 billion. But guess what? It's been weeks since then. And the Powerball is still at 40 million. You think people are waking up to that saying, fuck you, Powerball. It's rigged. It's all fucking rigged. But the Mega Millions like 300 some million because they're boycotting Powerball because it's all fake. But here's the thing. They're all the same. They're all fucking rigged. They're fucking fake. They're not going to fucking pay $2 billion to somebody in the fucking world, okay? On some Mickey Mouse fucking shit. $2 billion? Get out of here. Get the fuck out of here, man. But anyway, it's time for the 5 questions. Let's see who's on the list here. Now, I'm going by, the person that's at the top. And when I look at this stuff, it'll say here, here's the question or whatever. Or the person asking a question. Oops, let me see. Let's see if I did it wrong here. So I got 19 requests to speak, now 20. And I don't recall how to, because all I'm seeing is everybody. Hang on here. Give me a second. It did say 20, but now I'm on the page. It says request and it says 0 request to speak. And I know that's not true because of this song. Okay. The first person here is Panache Graham, and I'm not about to pronounce that last name, so I'll do it wrong. So you got one question. Can you hear me? Can you hear me? Hello? You're on the air.
My name is Panache Gorigi and I'm from Zimbabwe. My question is concerning Forex. I've been studying your mentorship, ICT 2022, and did the core content. So I want to ask, you seem to be a bit off with Forex. Is it okay for us to continue studying, studying the content that you're offering us on Forex, or we should continue, or we should study future indices?
Okay, so if I understand your question correctly, you want to know, because I'm not trading Forex anymore and I have no active interest in
Yeah,
returning
you
to it.
seem to be.
Should you, as my students,
Yes, yes.
should you not be doing Forex and only trade index futures? That's your question?
No, like study? Should we study using index futures or Forex? Basing
Well,
on your.
I'll say this.
Mhm.
If you are interested in Forex still, you can do that, but you should be studying index futures, because the things that I'm teaching in real-time market conditions and the things I'm teaching with my examples and such, you're able to see and study it live right now with me. Like, for instance, if you go back and try to look at a 1 minute or 5 minute chart on TradingView,
Mhm.
like 6 months from now,
Mhm.
or in the past, you can't really pull that data up. So it's important for you to study what I'm showing you in E-mini S&P or NASDAQ futures, because the same thing applies in Forex. The only thing that's different between Forex and index futures is there's a slight beginning time difference. Forex can start earlier, and index futures is 8:30. They both can be used at 8:30, but I can take a trade in both. But using the model, using index futures, if you study that and just simply apply those ideas to the time windows for Forex, they still work the same. But for real-time trading and real-time learning, you should be studying the US 500 and the ES, or the NQ, or the US 100 if you're going to be using like Forex brokerage firms. Studying that actively, you will learn, you'll grow, and I'm not trying to funnel everybody into futures, because it's all going to be a personal choice. And my convictions that are personal about Forex, they're mine. I'm not trying to I'm not trying to make anybody not want to trade Forex. I just disclosed why I'm not willing to do it. Does that answer your question?
But so you mean the patterns are the same? We should, if you are trading Forex, you should continue studying with Forex and everything.
Yes, they're the same mechanics, the same entry strategy, the same trailing of the stop loss, the same partial. The model itself works in every asset class, whether it be Forex, whether it be commodities, bonds, currency futures, index futures. And I have a lot of students that swear by it in crypto. I don't co-sign that myself, but they say it works there too.
Okay, thank you very much.
You're
I
welcome.
think
Thank
I'm
you very much.
answered now.
Thank you,
Okay,
sir. Have a good day.
thank you.
Okay. I don't see another person asking, but I'll wait a second or two. This is very cumbersome. You got a question? Request. If you have a request, are you open to talk? I guess toggle it off and toggle it again. It might be a way for me to see, because that other guy just popped up. Yeah, I'm not sure why it's not showing. Okay, now I see on one screen it says I have 107 people requesting to talk. But when I click on that, it just shows me everybody that's here. And I don't know how to differentiate from the first person in the list. Or even, there isn't in the list, really. It just shows everybody that's listening. So I'm unfortunately not doing well here in this. Okay. Yeah, see, I don't know why it won't let me. Yeah. I don't know how that last person requested because it popped up on the screen where I says, I have guests open on Twitter Space. And it says that me, I'm the host. It says co-host 0 with 2 spots open, and speakers 0 with 10 open spots. And then below that says requests to speak, 0 requests. And I don't know how to get all of you that are asking me a question. I don't know how to get that to happen because it says I have 129 requests to speak. This is frustrating me. All right, let me do it this way. The first 4 people that tweet to me, I'll try to find you and I'll invite you to ask your question. I just don't know how to do it otherwise. Pro charge move bar, watch a video. Oh man. All right, so here, alter ego trader. How am I going to get that to happen for you? Oh, I see a request. So I'm not sure how you guys doing, how you're doing it. I don't know how to pronounce this name. I apologize. Kashala, you're on the air. Can you hear me? Hello, can you hear me?
Yes, I can hear you. Hello?
Hello.
Yeah, hello. I hear you. Hello.
Go ahead with your question.
Okay, I'm from Tanzania. My name is Kachala, and I have a question to ask about the monetary issue concerning with my accountant. something which I want to trade. I wanted to trade imminent S&P 500 future, but I only have like $30 account, and I wish I would trade S&P. So, as you, my mentor, I would like to ask if it would be good to just trade Forex or to trade S&P 500. As I would like to get your advice according to my account.
I don't. It's hard to focus with all the background sound.
Hello.
Yeah, can take me off the speaker.
Oh,
Okay, so you should be able to hear me, your earpiece, if you take it off speaker. So my understanding in your question, if I heard it correctly, is you have a limited amount of funds, but you want to trade the S&P. But I think because you see me doing it, that's making you want to chase what I'm doing. And if you are interested in Forex, should you not do that and only trade index futures? Uh, my advice, it sounds like you're outside the US anyway, and CFDs would probably be permitted where you are. They're not permitted legally here in the US, so we have to trade the futures contract. But if that's the case, my advice would be just simply trade through the demo of a US 100 or US 500 CFD and use that as your instrument. Because while they don't mark to market exactly like the US futures in ES or NQ do, you can still learn and still practice in it and get proficient with it. So it's not a matter, again, of trying to lure people out of Forex and into index futures, because it's ultimately going to be a choice that you make as the student. And if you're not comfortable with either or, whether it be Forex or whether it be futures, it's important for you to listen to that discomfort, because it's not going to be fruitful for you to force yourself into something that you're uncomfortable with. No matter how good I can make it look with my own examples, if it ain't right for you, it ain't right. So you have to do what you can afford. You can do where you're located in the world, and you may not be permitted. There may be barriers to you being able to trade certain instruments. And unfortunately, there's nothing I can do or anyone else can do to overcome that. So I hope that answered your question, but that was my understanding.
then thank you very much for helping me out, my mentor.
Thank you, sir. Have a good day.
Have a good day. You are welcome to our country.
Alrighty. Again, I don't know how I got 0 requests right now. I know some of you probably might think I'm being less than honest, so I'm going to screenshot share this. I'm going to show it to you. This is what I see. Okay, so that way you know. I know there's people that want to talk, but I'm not able to see it because it says request to speak is 0. When I go to the all tab, I don't see anybody requesting now. I got 3 more spots open. I'll give you 10 more minutes of my time, and then I'm going to have to close it whether you ask or not. $8.88 OnlyFans. I have a question. I have a uncertainty about asking you to join me if you're an OnlyFans account on Twitter. I'm not going to be doing an OnlyFans account. Sorry. All right. I'll read the questions out because I'm going back to what I asked you guys earlier. The first ones that would call in or whatever, I'd answer your question. So the next three I read here are in the order I received them as tweets. So 6 minutes ago, life without something. So with that being said, if I am a 30-day trade, I'm sorry. So with that being said, if I am on a 30-day trade mandate, what is the best routine for us traders to use your concept with a 30-day mandate for our personal accounts? Thank you, sir. I'm not quite sure what you mean by you're under a 30-day trade mandate. So I don't know how to address your question. But if you rephrase it, I'll answer it on Twitter directly. I'll reply to you. I apologize. I don't know how to understand your question. One above that one is PedRam. Can we consider 9:30 a.m. as a medium or high impact news or indices? You're not considering 9:30 as a medium or high impact news event. You're looking at as the opening. So that's the equities opening in the New York session. It doesn't mean they haven't been trading. They have been, obviously, but for the New York Stock Exchange to officially open, it's 9:30. So we don't really want to classify it as a medium or high impact news event. It's just that's the opening price or the opening of the session. And I'm seeing you all saying you have a question, but you didn't ask the question. So I'm scrolling through till I get to the A question. Trading US dollar for the past 2 months till now, I noticed the fair value gap doesn't, I guess, get filled on the lower time frame. It takes about a week or two to fill. Is that supposed to be so, or is there an explanation to that? Number one, gold is highly, highly manipulated. It's an event-driven market, and that means that unless you're trading a news driver with very low-hanging fruit objectives, that market will tend to frustrate you. Yes, there are precision elements that can be utilized in that market, but I tend to only consider that market when there is a significant driver that makes it so obvious that what it wants to do a particular thing. Because of that, it's not as precise. It's not so reliable like an index future, okay, or how we like to structure our trades. I mean, you see recently where I was looking for a particular low to be taken out, and it got real close to it, but denied it. And it tends to do that, much like dollar Swissy. Okay, like Swiss franc is a pair that I think is very, very tricky. It's highly manipulated. It tends to be very choppy, and sometimes it'll come back again for stops more than any other pair. And yen is a pair that I can't stand because it's extremely manipulated. They are always tinkering around with their currency, and they could ruin you, literally. So gold has a tendency to be fickle and only really, in my opinion, this is just my personal opinion, gold shouldn't be traded as a consistent vehicle because there's better markets to trade, in my opinion. And I don't see anything else except for people saying they have it. Okay, do you think it's good to be a high frequency trader? Oops, I'm sorry, I skipped over one. Grace there's oops, I hit the more reply button here. If we work in a job with a 30-day buy and hold restrictions, what is the best way to trade quarterly shifts in today's markets? The way I taught it, and that's the best way. I mean, there's this. I haven't amplified any of my teachings. They are as they are. They haven't fallen out of style, and they haven't fallen into a state of inefficiency. Sir, how to trade indices which are not open full day and always open gap up and gap down. My understanding is you're probably asking about the Indian markets, and I get asked a lot about this. Do I trade the Nifty? Do I trade the Indian markets at all? Does my concepts work in the Indian markets? I personally have no experience, much like I don't have experience trading the uh, synthetic something. I don't. I'm always asked about it. If an instrument has something synthetic in the name, no, I don't know anything about it. No, I've never traded it. No, I don't know if my concepts work in them. Okay, so I don't know. I don't know how to answer any questions about the Indian markets because I know yes they gap a lot, and to me, I have no experience trading it. I wouldn't be able to trade it, and I just don't have an answer for you. So I've always answered the same response to those individuals that are in India if they would supply their intel about whether or not the things I teach work in their market, because I don't personally have any experience with it. I made my funded challenge, and I'm working in a normal job. When is the best time to leave my job? Well, I've always stated that if you have 2 years living expenses, whatever your living expenses are for one full year, you should have at least two of that and a minimum of $100,000 equity to trade. And you've been consistently profitable for 2 years. So there's your definitive, in my opinion, that's when you should even consider. Prior to any of that, you shouldn't consider it because you need to have at least 2 years cushion behind you. So that way you're not feeling pressured to take a trade to live off of. That's the conundrum most people think. They think they can go and get a funded account, and you may be funded up to $500,000 or even $1 million in multiple accounts and think I'm padded out. You're not, because if you do things wrong, you could lose the access to those funded accounts, and funded accounts could just stop being a thing. And you don't really have $500,000 or $1 million. You have to have money to live on in the times when you don't take trades or when you are in drawdown. You don't want to be in a position where you're trying to make money in the marketplace because you need to pay bills. So if you are behind that 8 ball, if you will, proverbially speaking, that creates a tendency for traders to be impulsive about doing things in the marketplace when there really isn't an opportunity that's low risk. So 2 years living expense, $100,000 equity, and you have 2 years behind you in consistent profitability. That's it. If you do anything beyond that or less, in my opinion, you're really trying to make it harder than it has to be. And yes, it takes some time, and yes, it's going to take time to get up there. But if you are trading right now while you're working your job, and you can get to the point where you're using a funded account, or if you're trading your own money and you build it up while you're working, number one, you have that ends being met with your job. So you're not having to tap into your profits. You're letting your profits grow, building that nest egg up of $100,000. Okay. And then building up 2 years living expenses. You probably don't have an expense, and I'm taking great deal of liberty by saying this, and please don't be offended if it's not true, but you probably don't live on $100,000 income. So what is your 2 year living expense? If you're living on, I don't know, maybe 50,000, 55,000, the average median income in the US, that's about $110,000, $125,000. So that's 2 years living expense that you can tap into if you need to pay bills and not have to have a trade to pay them. And then you have your $100,000 equity. But you have to have that 2 years behind you in experience, because if you're doing it before that, you have no idea what you're doing. And you're going to be swayed by all the pressures and the anxiety created by doing it like that. I am based outside US in Asia, and I trade CFDs. It's near impossible to trade FX without burning my account until recently. I switched to trading DAX and US 30. Do you have any current view on these two indices? I don't have a bias on the US equity markets right now. I think we've pulled back inside the range that we recently just had on daily chart, that long run down low. What we do from here, it might be static choppiness that just keeps us in a narrow consolidation into the close of the year until proven otherwise. That's what I'm expecting. DAX, I never really have an opinion on. Do you think it's good to be a high frequency trader? I don't think it's a advantage to being a high frequency trader. Just for me, because I know what I'm looking for and I'm short attention span and I can make decisions on the fly and change my mind a lot real quick. And I have no problem being in and out and fluid with second charts, 15-second, 5-second charts. If I know what I'm looking for, I can do that. But just because I say I can do it and because I do it, that's not something that you should say, well, I should do that too because ICT does that. All of my trading isn't based on high frequency. My examples are utilizing high frequency trading concepts because it allows me as a mentor to give you a plethora of examples of how this stuff works versus, like, for instance, if I was trying to teach you all this and I'm only using a daily chart, how many examples am I going to be able to show you? It's going to be a very, very, you think I'm boring now. I'd be really boring if I was just showing you daily chart examples. It'd be, one every 6 or 7 weeks. if I can get it that frequently. So I use these very, very low time frames to, again, thumb my nose against all the people that say that you can't time the market. There is no precision. There is no elements in these intraday charts that are based on anything that's sustainable. And it can be very, very frustrating for someone that would want me to teach them on a higher time frame, and I'm only doing this in these lower time frames. So it gives the impression that I'm pushing high frequency trading when I'm not. I'm just showing you how this can work on other time frames. You just have to expand your patience beyond the scope of whatever an intraday chart would demand, which obviously, a 1 minute chart, we could take about 12 to 15 setups in a day if we were using a 1 minute chart in second intervals. There's lots of setups in here. You're not getting 20 pip or 20 handle runs on every single one of them, but you can get 3 to 4 multiple times, and that can parlay up into an enormous return over months and over a year. Now, does that equate to being good as a high frequency trader for someone as a student? No, that shouldn't be the reason why, because you can use my concepts on any time interval or any approach to trading, whether it be scalping or swing trading or position trading. They're all potentially profitable and they all have incurred risks just like every other model does too. So you can lose money on all of them. You can make money on all of them. So it's a matter of you determining as a student where your comfort level is. What is your personality? Are you nervous when you're looking at these lower time frames? So a lot of people can't make decisions on these really short-term time frames. It's scary. Like, they can't commit. They get shaken out really easy. And if that's the case for you, then you're too small of a time frame. And that's how you evaluate it. If you're anxious at the time frame that you're looking at when you're paper trading and studying price, that time frame is too fast for you. You got to go up to a higher time frame until you find the one that works for you. It might be an hourly chart. It might be the daily chart for you, okay, or anyone else listening. So don't let that be a hindrance, because it's about making money, and you can make money, lots of it, with just a daily chart. It just takes a lot more time for those things to develop. This is the last one. Grant me to speak. I said one question, you give me two. Question one, can you make example on Forex? I have already outlined one in our discussion today, and you can go back through the old data and you'll see many times what I just outlined. That's the part you're supposed to do. That's the work. And can you share those failed setup example and how to avoid them? Again, you'll see that also in backtesting. That's the benefit of you doing the work. Number one, it removes laziness. And I've done more than a typical mentor would do. I'm showing you where to go to find the answers. I'm showing you what it would look like, or explaining what it would look like, and how you would navigate it should it fail. What procedures and protocols would you follow? And you study it and you see, is there any validity to what I just said in this Twitter space? Is there anything valid that constitutes a reason for you to mine or study it further, and or to study it going forward as a forward walk forward test? And that approach is what every student is required to do. I don't make little, let me go on the charts and find one for you. In the beginning, I tried to do that. And that, to me, it wore me out, because if you have just a dozen students And they're always asking you, hey, can you show me an example of this? And can you show me, how about you show me an example where you're having a problem with understanding about it? Okay. That's the problem I have with today's society and my student base, because there's a lot of laziness in that. And I think if you look at every medium of education, there's always going to be this group of students that just simply, they want it easy, they want it right now. And I'm not beating up on you. I'm just telling you, this is how you learn it. Okay. So you go through the process like everybody else does, and you submit to it. And you will find the answers to the questions you're asking, or removing the doubts and the concern about whether things are valid or not. And it's beneficial for you to see when you think you might see it in a chart and it doesn't pan out. How does that make you react? Does it make you come unglued? Do you lose your mind about it all and feel like I'm going to quit? Because if that's the case, I'm going to tell you right now, then you are not going to be a trader, because you want it black and white. You want it win, win, win. Don't ever lose. And as much as you're going to probably, if we were talking live and or we were in a room together, you would probably shake your head and say, no, that's not what I'm saying. I'm telling you, yes, that's what you're saying, but you're trying to deny it. You want to avoid the pain of doing it wrong when everybody does it wrong. Every mentor, every profitable student, every profitable mentor, every profitable trader does it eventually wrong, and it will incur a loss. You will lose money. Money will be debited from your account when you do those things. That is the reality of this industry. There's absolutely nothing I have that will absolutely 100% remove the likelihood of that occurrence. It will happen. You can guarantee it's going to happen. You can bank on the fact that you're going to have a losing trade, and it should not deter you. That's the difference. The difference is knowing that these things repeat more favorably over time than they will fail you. You will fail yourself more frequently than these concepts will fail in general, because you're going to interpret it wrong. You're going to see things in the charts because you're manifesting it. You're seeing something because you want to do something to distract yourself. So there's plenty of examples where if you simply pick any market and go back over the last 6 months, and you'll see where there was potentially a setup there and it would have failed. And what you would have done, and if it doesn't pan out again, the procedures and protocols I outlined here. It's trade management, it's mitigation of drawdown, and how do you restore the drawdown? I covered all of that in this space here. So there's no reason for you to ask me or anyone else to show you examples of this, that failing. You can see them, they already happened. And you can see many of them where they panned out. And using the logic, the weekly charts are already there. You can look at what, last whole year of each individual weekly candle. Was there more expansion than the upside or the downside? Well, that go into those back studies. Okay. And for instance, let's look at it this way. Let's say the NQ is your study. And I'm going to say this, and I'm going to close the space because I need to get off here. I've been doing it too long. Let's just say you want to use the NQ, okay, NASDAQ futures, and you pull up your weekly chart and you look at, say, I'm going to just randomly pull a number out. Let's look at the weekly candle. I'm not doing it. I'm saying you do it. 7 weeks ago. Okay, seven's just a number just jumped in my head. There's no reason why. I have no idea what 7 weeks ago, what price did in net and Q. I don't recall. I don't remember. It's too far back for me to remember key levels from that time frame. If it was last week, I would. But 7 weeks ago, I don't know. But what was the week prior to 7 weeks ago? In other words, right now, we have not opened up on this particular trading week. And today's date is November 27th. It's 10:20 a.m. New York local time on a Sunday. So the markets are closed right now. If you go back 7 weeks ago, or 7 candles on the weekly chart ago, the 8th week from today, you would be looking at that particular week, expecting or anticipating what the following week would look like, which would be 7 weeks from today, looking back. Whatever that weekly candle did on the 7th week, you should pretend right now, this is what your pseudo experience does for you. You pretend that you had it right in your bias. In other words, if it was an up candle that expanded higher, or if it was a down candle that expanded lower, you're assuming that you had that part determined beforehand. Then what you do is you go into those particular days of that week and you look at it from a hourly standpoint, you break it down from hourly from Monday to Friday, put your daily dividers on, outline the times when the session starts that we like to trade, like 8:30 in the morning till 11 o'clock in the morning. What setups formed? How did they form? Did it reach for liquidity or did it go back into an imbalance before it created the setup that was in line with that weekly expansion, whether it be bullish or bearish? And then you do that individual day on a 15-minute candle and you do the same markups in more detail. And you do the same thing with the 5-minute chart, the 4-minute chart, the 3-minute chart, the 2-minute chart, and the 1-minute chart. Oh, fuck ICT, that's just too much. Well, get up the road if that's the way you think about it. Because you want to learn how to make fucking money. Money making ain't fucking easy. You got to learn how to do this shit. And it means you're going to roll your sleeves up and do this stuff. If you don't want to do that, you will not learn this. You will not learn it any other way. That's what separates the men from the boys, the soldiers from the cannon fodder. You have to do these things. And you have to be diligent about doing it. And you continuously do it. And you study and you study and you study. And you go through all the time frames. Just like that. And you collect every new week of data, even if you had losing trades. You record it in your journal as if you knew that was going to happen. And you record it in your annotations. And what happens is you're retaining the pattern recognition aspects of seeing the examples seen over and over and over again. And you're recording your own annotations. Now, in truth, you're lying in the annotations about having seen it, but you're rewarding yourself visually and through annotation, so your subconscious retains it as this is a good experience. I saw this coming, and I'm happy that I saw this pattern fulfill as I learned it. Now, that's not the same as lying and saying, I took this trade, like you see everybody on Twitter. I took this trade. I took the same trade as you did at ICT, and they don't have their executions. That's why I don't like those kind of posts. You need to go through your annotation, say, I'm thankful that I see the model unfolding in this example exactly how it should have. So your brain sees that, you remember it because you wrote it. So it's tricking your brain and providing pseudo experience. It's self-talk. Okay. It's a way of replacing anxiety and nervousness about not ever learning how to do this with positive reinforcement. And you're collecting examples that you're going to refer to continuously in your study journal. You're going to keep go back, looking. Okay, this is what that week looked like, and it's a wonderful resource because after, there's going to be times and you look back at old moves and you think, man, I wish I had looked at a 1-minute chart on that day. You'll have it, and that's why it's important for you to be a specialist. You see these guys out there. Yeah, I follow 27 pairs. That makes me professional. No, that makes you a fucking junkie, and you're not a professional. You need to specialize on one market, maybe two, but one market. And here's how you know there's a professional. If they can tell you what the 15-minute highs and lows and the 5-minute highs and lows in the New York session and the London session, they're a professional. Ask yourself right now, could you say what the 15-minute high and low was and the 5-minute high and low was in any particular market? You probably can't. And these same people on Twitter and YouTube and Discord and Instagram and Facebook, they're all full of shit. Okay, I know what I'm looking for. I know what levels I'm working, but I can't remember it 7 weeks ago. Okay, and I just reached 7 because that's the number that just jumped on my head. Mathematically, that's the number everybody's going to reach for, between 10 and 1 anyway. But I covered a lot of stuff today. I went through something that would have otherwise only been taught if you were one-on-one with me, like it was in the 90s. Okay, I covered a lot of things that were black and white, binary. Do this, don't do that. Do this if this happens. Okay, I walked through something that would have otherwise been given to charter members in my private mentorship. You have something now that's real, it's tangible, it's something that you can work with and go forward and study backtesting. And also, once you backtested and burnt enough hours in logging examples, how many is that? How long do I have to do this before I should know I know how to do this? You'll know when you're bored about what you're about to anticipate in the marketplace, and it happens. When I say you need to be bored, you need to be fucking bored. That That is the surest sign. Okay. If you're looking for that, that sign or that, you know, way of knowing that this is what you should do, when you can call the marketplace and know that you can push it in a demo or a paper trading account, you don't care what the end result's going to be, but it's always the same thing. It's going to target more times than it's not. And you don't care. You don't care if it's money made in real terms or if it's demo. You've gotten so comfortable with the outcome being not necessarily known beforehand, but you know that you've been doing it long enough that this is the reasonable expectation as an outcome. When you feel that way about your trades in demo or in paper, that is the surest sign that you are psychologically equipped to then consider, not I'm giving you the, hey, go and do it, but that's right about the time when you can start entertaining the idea of maybe doing it with live funds or a funded account. And I know I just broke a lot of hearts by saying that, but don't you want to learn the right way? Don't you want to be equipped to do it the right way? And I know it feels like the world's crumbling all around all of us. Okay. But you can't speed this stuff up. You can't make it faster. You can't skip it. You can't cut corners. You can't have it your way mentorship results and get, blue ribbon results. You can't do it that way. I promise you it doesn't work like that. I've seen so many people, hundreds of thousands of students come through, and predominantly every single one of them that rushed it fell right on their fucking face. And then when they slowed down and they removed all of the Olympic expectations they were trying to place on themselves and stopped worrying about social media influence and acceptance, then it worked. It worked for them because it took all the pressure off of it. It took all the anxiety, the performance anxiety, the need to do well in other people's eyes. That's all something that will be a stumbling block for you. Trading competitions, if you're developing and you're all rushing to get good so you can go into trading competitions, the quiet people that talk shit, you're doing it wrong. You're doing it wrong. So you want to be bored. You want to be like your job. You hate your fucking job. You can't stand your fucking job. You can't stand the commute. You can't stand coming home. You're tired, but you know your fucking job. You don't get aroused because you're at work. You don't get excited because you're going to work. You're like, I got to do this again. Okay, it's what you got to do. That's what you have to do about your trading model. This is what you got to do. You got to do these things, and you know that hey, getting up tomorrow morning to go to work, you don't know if you're going to get a flat tire. You don't know if you're going to get sacked. You don't know if you're still employed. You might get sacked. You may be made redundant and removed. And you're going to see a lot of that coming forward in the next 6 months. A lot of people are going to be losing their jobs. And that's going to also make you feel like you got to rush. Don't. You'll undermine months of development if you invite fear and anxiety. Don't do that. Keep the focus on the right direction and be consistent. Doing these things and back testing and collecting all these experiences and logging them and learn to love doing that. I see, I watched Hannah's video the other day. She goes, I hate back testing. Girl, you better straighten your shit up. You better fall in love with that part because that's what's going to make you better. You have to love that. You have to fall in love with that. If you can't find a way to enjoy, it's almost like meditation for me. And I'm good. I still like doing it because I'm so impressed with the level of precision that the algorithm is consistently delivering. It's not randomness. And it's so beautiful to see how it does what I teach you, it does. And it's almost like poetry. Like, I mean, obviously I'm biased. I mean, my fingerprints are all over this fucking thing. But the point is I literally love seeing it perform. And you have to admire it, even if you can't take that trade. Even when you lose in a trade. When I take a losing trade, I look at it, I'm still like, I still see what I did wrong. I see what I did wrong, and it's still doing what it's supposed to do. And you can't be mad about having to do the work. That's reasonable. You want a fit body, you want a beach body. Well, you're not going to get eating fucking donuts. You got to lift some weights, you got to cut some calories, you got to exercise, right? Well, that's effort. Nobody fucking likes to go to the gym in the beginning. They hate it. They got to get through that first growth spurt of pain and soreness. But when you get rid of the sugar, you find out you don't have that much pain anymore. And you're going to be sore and stiff, but not to the same degree that you were in the first 3 months, the first 6 weeks, the first 2 weeks, where you're getting rid of all that shit in your blood, all that sugary stuff, all that extra sugar in your coffees that you shouldn't be fucking drinking anyway. But anyway, I've had fun today. I've enjoyed spending time with you, and hopefully you got something out of this one. I'm going to have to find something to get into while my wife's not here. She's out there spending probably more money than she should. These outlets, they say, hey, you can save so much money. She could save more money by not going. How's that work for you? She'll find an excuse. Look at this. I got this for 50% off. Yeah. And all of our fucking kids have closets stuffed. Okay. You can't put another fucking thing in there. Not another fucking hanger can fit in our closets. Literally. But she'll be out there buying shit. I don't get it. But I guess it's a woman thing. But nonetheless, I believe I've given you some useful insight today. I've given you some tangible rules and procedures and processes and logic and how you go into a morning routine. This is my morning routine. It's been this way for decades. Like I haven't changed it. I haven't made any kind of adjustments. I've never felt the inclination to make an adjustment. The only thing I didn't mention, now I'm looking at my notes, I skipped over the point number 4, and I don't know why I did that, but I go on social media and I go on to YouTube channels, people that do live streams. I love watching people live stream because that is the greatest feedback for market sentiment than you could ever have, because they are in a position of raw attention span on what they believe at the time. And if they push a button, number one, I have every bit of respect for anyone that does that, whether it's somebody that hates me or doesn't know me or they're a fan or a supporter of what I do. Anybody that has the fucking balls to get out there in front of the world and either fall on their face or shine, that is, to me, that's something personally, that's a limitation. I can't do it. I cannot be in a position where I can have 100 people or so, or even more, a dozen really. If someone's constantly asking questions, my mind's going to say, okay, I got to at least see what they're asking. And that's going to distract me. And I can't focus. My attention span is you can just listen to me in these Twitter spaces. I'm not even looking at a fucking chart. I'm all over the place. And then you're going to add to it, I got to watch 1-minute charts and make a decision and decide whether I'm doing the right thing at the time. And I guarantee if I do live streams in February, you're going to see it's not going to be 200 people there. There's going to be a lot of people there. And they're all going to want to have a question answered. They're all going to have some point that they want to make. And I have to ignore all that. I can't look at that. Otherwise, I'm going to be distracted. But for people that get out there and trade and push a button, whether they're doing it in a funded account, whether they're doing challenges like Trades by Matt, I got respect for that guy. I know he catches a lot of shit from trolls and such, but he's out there doing it. And when he falls on his face, he owns it. And when he does well, he likes it. He has fun. But I think he's having fun regardless of whatever he's doing. And that's cool. I can respect that. I watched Vinny the other day. He drew down on his account, and it was significant, like $13,000. And I just said, yeah, it was a hard day for me too. And he climbed up out of that. And I watched him do one of the trades. I didn't catch the whole thing. I had to come back like late in the next morning and looked at his results. He came back out of it, but he pulled out of it, and that's skill. You don't do those things randomly. That's stuff that doesn't happen because of guesswork. And I've actually recently commended him because when we were talking earlier, like years ago on Twitter, and he was trying to, show me his algo box stuff in the early stages and say, hey, look, take a look at this. I think you would like it, blah, blah, blah. I saw all the overlays and things. And without being a dick, I told him, I said, look, I can't look at stuff like that because it's a distraction. I said to him back then, I said, if you remove all of that stuff and you create something that tells a person when it's a buy, when it's a sell, remove all those overlays because it's too bloated. You know, if you make it clean, simple chart, when it's going to be a buy, when it's going to be a sell, that is going to be the ticket. That's if you're going to do something algorithmic, make it simple like that because you don't want to give them all these things to look at. If you're trying to give them something that's automated or something that's going to help them, make it easy. Make it easy to see what they're trying to do. And I guess with all the the shit that he's been trying to sling at me and stuff, I still been talking to him. I told him, I said, look, you know, you did what I said. That direction is where you should go. And I told him, I said, what you're doing right now is the right thing. You're building something that is, in my opinion, if you work out all your kinks, you have something that people will absolutely fall all over themselves to do. Because if they can find something that triggers a buy or a sell, and right now he's doing like a yin and yang type thing, which I thought was cool. I said that's a nice touch. He calls it enigma, and that's like a rub against me. But whatever, it's marketing. I get it. But what he's doing, he's going the right direction. If he would have fucking listened to my suggestions, and I'm not saying this is my credit, okay? I'm just saying I know how to market. I know what traders want. I know what they're looking for. And if he has something that's automated, if he strips all that bloatedness, that stuff on his charts, and streamlines it to this is when it's going to go down, this is when it's going to go up, and it tells you that, that is exactly what lazy neophyte traders are looking for. And that's not a knock against them. Every one of us started that way. I started that way. And if you can't do discretionary trading, and I have lots of students like that, and I told Vinny, I said, listen, why don't you just simply fucking code the 2022 mentorship? The rules are simple. Put it in NinjaTrader, and there it is. And if you show the results are good, I'll even fucking co-sign and say, look, if you can't do what I do, discretionary, use this guy's shit. And I don't want no fucking kickback. I don't want any royalty. I don't know what the fuck this guy's problem is. I mean, I got 400,000 subscribers. All he has to do is clean up his fucking act. Stop being a jerk. If you got something that works, if I see it works, and I saw that you know how to fucking trade, I saw it. But if you automate that and it's streamlined when it's a sell, when it's a buy, man, that's a blockbuster. That's an easy fucking moneymaker. Now, is it worth $4,000? I don't know. That's a pretty steep price ticket. I didn't even sell my mentorship for that much. But everybody has their own price tag, and it might be something that he generates into something that's colossal, and I'm all for it. I'd love to see that. I ain't got anything personal against anybody. And even though he said a lot of shit that ain't true about me, I know what he's doing. He's trying to draw a crowd. But I told him, I said, if you just listen, just listen. I'm not your mentor. I'm not your teacher, but I do know what works. I know how to sell. I'm not a polished salesman, but I know exactly what traders are looking for. And I have lots of students, lots of them, that can't sit down and decide what to do. They don't know how to be disciplined. And if you have something that's automated and it's consistently calling turning points in the marketplace, that is a foundation that they'll dogpile on that. And that's an easy selling thing. I said, it'll sell itself. Like literally, it would sell itself. I mean, think about it. Forget me for a moment. Take me out of the equation. Forget what you're learning with me. Put all that aside for a second. If you did not know how to find daily bias or set up timing, wouldn't you fucking like to see something like that? And if it was consistently able to find setups like that, wouldn't that be something that you would entertain at least looking into? If you say no, you're a fucking liar. Because I've been doing this for 30 years and I'm still interested. I'm watching what he's doing. And I think by him taking all that stuff off his chart, he's finally fucking listened. And he'll see if he just focuses on selling his product and not drama, he will get what he's trying to get. And he'll do it the right way. He'll polish his image up. He'll clean his up. His trademark, his algo box will grow with reputation, not all this muddy shit. Because there was nobody threatening his fucking family. I never did that. I never did any of that stuff. And I knew he knew how to trade back on Twitter. And I knew if Adam Webb got into a real competition with him, he'd mop the floor with him. And Adam Webb faked all this bullshit. Didn't even try to fucking trade. He's a fucking clown. He's even blocked me on fucking Twitter, and I haven't said anything about him until I guess recently. But he blocked me as soon as I got on Twitter. Fucking douche. But if you haven't been watching what Vinny's been doing, he's got a channel. It's Algo Box Trading. You know, I know he's got his drama bullshit channel where he likes to fucking troll me and talk shit about me on his other one. But he has Algo Box Trading, and he's got my logo up there, and I know why, because it's drawing attention. I don't give a fuck that he's using it. I don't care. Okay, but what he's doing with his Enigma, okay, he's trying to create this marketing thing around what he's doing with his Enigma automated algorithm thing. And I told him, I said, if you work out the kinks, okay, first of all, I told him, I said, if you are going to hit me with a lawsuit for fucking horseshit, you'll find out in court everything you said is wrong. Okay. 2, once you find that out and you know that you've been wrong about it, I will gladly send people to you if you work out the kinks. And when you say your shit's final, because he's out there testing it live, I would have never done that live. I would have waited for it to be up to spec. Then I would have said, take a look at this. But he's chomping at the bit to get ahead of everything. And I get it. I understand. But I've watched what he's been doing in the few live streams. I haven't been able to sit there the whole time because they go for hours and hours and hours, and I have things I got to do, and we've been moving around, whatever. But I did watch where he drew down that morning. It was one day last week, and he thought I was in there to troll him. I said, "Oh, I'm not here to troll you, dude. I mean, I had difficulty waiting for my setups too, but he climbed up out of that. Now, the average trader would not be able to do that. So I believe he knows how to use his tools. I know how people like to throw shit at each other, but I've never said he couldn't trade. But I think what he's doing right now, he's finally coming into what I've really suggested to him back, in the early Twitter days when he was reaching out to me. If we were going to do the live stream like we were going to do, I told him, I said, listen, I'm going to bring my audience to your live stream. Okay. You talk through what you do with your algorithm, because I'm interested in anybody. Anybody that's trading and pushing buttons, I'll sit and watch. I'm in the audience. I'm watching. There's a lot of people that are smaller that I still sit and listen to because I love the fact that they're willing to do it. And to me, I envy that. I envy that because I can't focus doing that. And I wish I could, but I can't. So when you see me doing my live streams, I'm not going to be answering questions. I'm not going to give a fuck what anybody's saying in that comment section. It'll be busy over there, but I'm going to be doing my own thing in the chart. So, but when I was talking to Vinny on Twitter years ago, way back, I told him, I said, I'll bring my audience. And I had about 38,000 people follow me then. I said, I'm going to say, I'm going to your live stream and I'm going to watch what you do and just outline it. Just talk about what it is you're doing, why you're doing what you're doing. And there it is. And I don't want any kickback. And if he's honest for once, he'll tell you that was the truth. I did not want anything for it. I did not want any kind of kickback. I don't want any kind of partnerships. I don't want any kind of royalties, none of that bullshit. I don't need it. I don't give a fuck. Do your own thing. I don't care. I'm not losing anything. But the very next day, this guy went out there and started fucking blasting Adam Webb, and it got dirty. And I was like, what the fuck? How can I, like even now, I'm doing something that I have avoided on Twitter before. Like he says some terrible sick shit about me. Okay. And I know he knows that none of that shit's true. He knows, but he wants that cancel culture to come down on me because it'll draw attention to him. Vinny, you don't need that. I will bring them to your channel right now with all the drama still, with all the bullshit and all the lies. All I'm asking you to do is do a live session and walk through and outline, talk about what it is that it should be doing and why it should be doing it. Keep the focus on that. I would love to sit there and watch that. I would love it. And I think anybody that is a trader would respect that as well. So all you have to do is, I don't care if it's someday next week or the following week or even the next year. I don't care. I said, I'm a man of my word. I would sit in the audience, just like I was the other day. I was respectful. I wasn't there to troll. And I listened and read all kinds of horse shit that you said and then people in the room said. I rebutted with none of it. I'm there for that. I'm not trying to harm you. I didn't want to harm you. I didn't fucking threaten your family. I didn't threaten your children. I didn't pay anybody to do those things. And I didn't do any of this shit that you say. And I'm not worried about what you say. But I know if you are bent up and you think this shit, maybe you do think that I had something to do with somebody, threatening you. I heard the person threatening you, but that wasn't me. That wasn't a result of me. Look at me. Do I seem like I'm worried? I'm still talking about you. That's proof. I've had no ill will towards you. I'm still, with all your horse shit, I'm still right now telling everybody that listens to me, I will sit in your algo box trading live streams and watch you outline what you're doing. And I've already seen enough to know you're going in the right direction. And you've admitted honestly, openly, that, hey, you got some kinks to work out. And I told you in a personal tweet, no, not tweet, text. I said, I like what you're doing right now. What you did before, I wasn't a fan of. I'm not a fan of the algo bars. I don't even know what the fucking algo bar is, to be honest with you. Maybe you can explain that. But there are people, even in my group, that if you streamline something, because they can't do what I'm doing, they've struggled. They couldn't do it. It doesn't mean that the people and myself that use it effectively and it works and it's precise for us, it doesn't mean it doesn't work. It just means that they can't do it. And they need something else. They may need something that's completely outside of me or whatever I teach. And I'm completely aware of that. There's people that go to other disciplines and they come back and they say, okay, I added this and it helped me understand this better. I still know that there are people in my groups that still are struggling because they can't be discretionary. They just don't have it in them. They can't do it. And they would probably do well with something automated. And it might not be something that is based on whatever I do. That's fine. There's lots of ways to make money. And I'm completely open to allowing my own audience to go over there, and I'll even direct them, go right over there and see what you're doing. Because I personally saw what you did recently. And when you took all those harmonic pattern, like the triangles and shit, all that, man, that's just too much stuff on the chart for me. I'm too distracted by that. Now, I might be alone in that opinion, but I know there's a lot of people that like to have a naked chart. What you're doing right now, man, if you work that shit out and you clean up all the kinks and the things that you're saying that there's confliction between different time frames and such and why it's doing this and doing that. And I'm not asking for the logic. I don't think you should divulge the logic either. Like, I think you should just say, this is what it's doing. It should be reading this until it gets to this and that. And what's the advantage? What's the advantage of not having all those overlays on the chart and how you can trust it on what you're doing now with your Enigma? That to me would be interesting. I would like to sit in and listen to that. I think viewers would listen to that and it would be helpful. And it would probably do more for selling your product, or at least building the audience. That way they can track your development with it. And once you get to the point where this is it, I'm confident now. It's doing what I aimed for, all the building plans for it, all the expectations for it. These are the things that I had hoped for, and it's able to deliver it. And this is where it's at. And now it's ready for public consumption. That would be cool, because it's kind of like a Kickstarter without having the money being poured into it. Like, you're building it and you're just going to keep the public up to date with what it is you're doing with it and where you are in the progress. Because I see major potential, way more than AlgoBox in its original formats. I have never been a subscriber to the things that you do, but I know that you know how to use your own tools. But what you're now working on is exactly what I was trying to tell you to work in terms of, if you're going to give something to the public, you need to make it very easy to understand and short and sweet. And the direction you're going now is perfect. That's perfect. That's exactly what those individuals that are looking for help with determining when to buy and sell. If you have something that's consistent, and it's obviously it's not going to be perfect. Nothing's fucking perfect. But when I asked you if there was a filter for daily bias, okay, I have no uh, opposition to you even considering what I just outlined in here. And you don't have to ever say you did it, okay? But something like I was outlining here for like the weekly bias, like if you factor something like that in, and I don't know what makes your bias for when you, like, I know you said that there's a setting where you can choose buys and sells or both directions. I'm not a fan of have a new student or a new trader doing both directions. Okay, and we might disagree in that regard, but I think that it's better for a student to understand one side of the marketplace predominantly over another based on the current climate. So if that's the case, and if you can either build that in, or if it's already built in and I just haven't watched enough of it to know what you've done, I think that would be advantageous for your product and for those that would might use it. And if you did that, I think it would increase the level of the results that you would probably get out of it. But that's just my opinion, and you can discount it or whatever the fuck you want to do with it. I don't really care, but I'm just thinking out loud because I wish you would have did that approach with your algo box back then on Twitter, because that would have been much more appealing to the Twitter base, and you wouldn't have had to really rely or hope to rely on a larger um, public figure like me or other people that you try to tap the shoulder of. I am in the worst place for someone to expect someone to send somebody to for an audience. Like you talk shit about me all the time. I'm not affected by it. It didn't slow me down. But I've told you, like I told you back then, this is who I am. My character is who I am. And if I said I would send people to look at you and watch your product and bring an audience, I said I meant it. And I wasn't trying to be involved in all the drama that you and Adam Webb going on. Adam Webb was trying to dox me. He did not want to do a trading competition with me. That's all that shit was. Him and Dante were back and forth, and I gave each one of them pieces of information to see if they would talk, and they both knew what the other person knew. That means they were in cahoots. I don't give a fuck about Tom Dante. He's a piece of shit. You have said things I don't agree with it, and they aren't true. With that said, if you believe the nonsense that you say, I'm here to help you cancel all that stuff. I'm not the person you make me out to be. I've never been like that. I've never been like that at all. And if you're joining the Robbins Cup in 2023, I swear to God Almighty, I'm going to be in there with you. And I will do my utmost best to make sure you don't beat me. But if you join it, you know what that means? That means that you did something that no other fucking clown talker ever did. You actually joined it. Now, do I sound like I'm afraid? Do I sound like I'm scared? Do I feel like um, I'm going to fall victim to anything that you're... No, I don't fucking feel any of that stuff. I'm proving I'm exactly who I've always been. And everything that you've painted me as is not true. If I was afraid of any of the shit you say, I certainly wouldn't be inviting people to go to your fucking YouTube channel. But I think what you're doing right now, that's the right direction. For your product and for people that need something automated, man, that is it. That's the ticket. That's the thing. That's the very thing that would help people that cannot trade discretionary. And it's hard. It's hard to trade discretionary because there's so many things that you have to filter out. And if you have something that's objective, where it's only a buy now, it's only a sell now, okay, that means they're going to subscribe to that, but they have to still subscribe. They have to commit to it. And I'm sure you'll work out the kinks. I mean, you seem diligent about things. But when you're ready and you know that it's met all your specs, like I told you in that text, when you say that, when you know it's ready, I'll draw attention to it. Say, hey, look, I watched this. I saw him do it. And there it is. I don't need anything back for it. And I ain't worried about no fucking lawsuits. I ain't trying to talk you out of it. If you think you want to go to a court session with me, come. I'm ready. I got all the fucking receipts. I'm ready. But I'm not that person you're making me out to be. I'm not. So anyway, I checked off all the boxes on my list here. And I apologize for those individuals that were maybe trying to get on here with me to ask a question, but I'm not sure how to do it. And there's a few people that popped up. How they did it, I don't know. But I did see there was like 127 of you requesting to talk, but I couldn't, for whatever reason, I couldn't get you to pop up on a list where I can toggle you. So hopefully you guys can help me in that regard if I did something incorrectly. I think that's going to be it. I'm going to grab me something to drink, grab me an apple, and I'm going to get busy into something else. Enjoy the rest of your weekend. Going forward this week, be careful. I have no bias. I have no directional bias. And if my wife presents opportunities like this between now and February where she's out of the house and it's not going to conflict with anything, I'll join you again in something like this. But don't expect it to be a daily or a weekly type thing because it probably won't be. Enjoy your holiday. Be safe.